Good day, everyone. Dan, Sharpe Trade. This is a weekly Sharpe Report issue heading into the next week. Today is June the 5th, 2017. This is issue number 128 of the Sharpe Report as we move into the next week. You're going to have to excuse me going into this. I am getting this out a bit late. I do realize that. I like to get these out on Sunday night, and the market's already opened and is running. Oh my God, we're starting to rally again. Quite a day on Friday, wasn't it? But you're going to have to excuse me. I am running late. Been sick this last weekend. I feel about as beat up as a 45-year-old mule, so you're just going to have to put up with my slowness today. I'm going to try and get through everything today, but I'm just running a bit slow. All right. So the three-ish strategies that we demonstrate, you know where we are at, right? You get the update most mornings that we send out those morning reviews. I didn't send one out this morning. Well, like I said, because I'm moving slower than a 45-year-old mule. I've been sick. But the stance we had on Friday is pretty well the stance on all the markets. And you know our positions because we spell out what our positions are on those three-ish strategies. So, you know where we're at as far as, our positioning on those three strategies. But I did want to talk about something else. So that's why I'm not sending out a text entry, because as sick as I am, I'd normally send out a text entry. But I thought, there's actually a point I want to make. So we zoom in. Friday was a real nice day, wasn't it? Just screamed higher. And we have been long as well. The Qs, which are screaming that we've been long the Qs. Actually, if you go back here, how long have we been talking? I think up here, let me think. For this whole time period, I think up to here we were saying be long the spiders, and then we said get long the Qs, right? So we've been long the spiders up to here and the Qs up to here in the second strategy we run. Yeehaw, right? It's all fun. Wow, everybody gets interested now. As they say down south, that wasn't the song you were singing back at the gallows. Why, whatever do you mean, Dan? It's just something I noticed, right? We show you three strategies. Let me bring up a chart here if I can. I'm going to bring up a chart of the beginning strategy, right? So this is what we've noticed, and just, sort of letting ones look over my shoulder as to what we do. Here's the beginning strategy. Here's a chart of it. Oh, for the love of God. I hate that snap that Windows 10 has where it automatically resizes everything. There we go. So we're up north somewhere at 9%. This is just a beginning strategy. It's the first beginning strategy we talk about in the short-term trading course. It's up north of 10% or something like that. Doing pretty well, right? And this is about almost for the last couple of years. It was in a bit of a grinding time period, which is why you heard Dan talking about grinding so much. You just got to learn to grind. You just got to learn to keep doing it. You just got to learn to grind. Rebalance. You can see the little rebalance portion right there. And you just keep doing it. In this whole section right here, we didn't really find all sorts of questions on this strategy. In this whole section right here, we didn't find a whole lot of questions. That one seemed to be talking about it a little bit more and asking us questions on the side and how does that work and da-da-da-da-da. Yeah, that's generally what we have noticed happens. When you see one of these, that's when everybody wants to know about the strategy, and somehow, magically, they just seem to, I don't know what it is, but they just seem to block out that, and that's the only thing that they see on the chart. And they want to know, how'd you do that? Well, let's be clear. I did that by grinding it out. Now, as we've said with this strategy, you're never going to have 80% years with this strategy. Not going to happen. But you know its benefits, right? We've talked about its benefits with you. We call it a beginning strategy because it's very simple for beginners to put on. But that does not mean that you put it on and, okay, I'll never have an 80% year, but I'm going to make money every year. You could just grind sideways, right? And that's why also That's why we think it's such a fantastic strategy to begin for beginners to start off with as they look over my shoulder, is because you have to learn how to grind. I don't care what the strategy is. I don't care. You've got to put in some time with it. And it goes back to the same problem that we see again and again and again. And I'm not pointing at anyone really. I've been trying to help out new traders for now 10 years by letting them look over my shoulder and see what I'm doing. But if you come over to Sharpe Trade itself and go over to the educational series, go down to the trading psychology and emotional discipline series, you probably know which entry I'm going to. Come down here to method hunting. Method hunting. What happens is traders will put on a strategy, and they'll hear Dan talk about, you know, the benefits of this beginning strategy, and they'll see its, you know, 90-year track record and its, you know, 20-year track record. Oh my God, that looks fantastic. Oh my goodness, on a longer time frame, it looks like it just goes straight up. So that's what I'm going to put on. And they enter one of these time periods, and then they get bored. You know, this is relatively speaking a short time period, by the way. They get bored and they go method hunting. They go looking up for something else. This doesn't seem to be working. Yes, it does work. You are seeing it work right here. Okay? But if you get bored and wander off because you don't like these time periods when it's working within its statistical normal variations of the strategy, and that is critical. People are like, well, how can you tell if it's working or not anymore? And it's like, I don't know. I had an entry on that some time ago. It was what was the entry? We called it adaptability. You know, it was about trader adaptability. I don't know. But one thing I can look at is it operating within its normal statistical variances? In other words, okay, it goes up by this much in, you know, a longer time frame, and you know, its maximum drawdown is, let's say, 10%, which is really low, by the way. That's like fantastic. If you can get your drawdown numbers to 10%, you're like a rock star. But you know, that's and it's not even down. So if its maximum drawdown is like 10%, okay, and it's down 3%, why are you asking me if it's still working? It hasn't even reached its maximum drawdown numbers yet. So why are you... The reason why people ask that question is because they get bored. They want excitement. If you want excitement, go be some degenerate gambler in a casino somewhere and let it all ride on black. Okay? This is no. It's like you put on the strategy and you grind the strategy. And if you want to be a trading professional, I'm promising this. You better learn how to grind. You better learn how to just sit there and do the same thing over and 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 over again. And I got to tell you, I knew, I'll be honest, you know, this isn't necessarily directed at anybody, but it's just patterns we notice, right? The questions disappear here, and all of a sudden, and I mean like right here, the questions start popping up about this strategy. And it's like, what were you doing back in November of 2016, December of 2016, January? Were you still putting it on right here? Were you still just doing your thing? If so, good. If so, great. Then you know what? You're one of those people that can also look at new traders and go, did you grind it out? You know what I mean? But it's just amazing to us how many times we get the questions right when this starts happening. And that's just the beginning strategy. So again, I'm just highlighting that point. You have to grind it out. You have to. There's no ifs, ands, or buts about it. Right? Especially on this beginning strategy, since the drawdown numbers are so low, we think it's a good strategy that ones can look over my shoulder and see what I'm doing. Right? All right, we got another one here I want to show you with a little more upside to it. Because this is a beginning strategy, right? This is a beginning strategy, and therefore, as we've said, it's not going to have those really, really huge years. So let's go look at the second strategy that we tell folks about. You know, there's a few variations of it, and we're gonna go over it as well, and because it does have a little more upside. So let me switch this over. Here we go. Here's the second strategy we show. Actually, you know what? I'm going to do it a little bit different way. I know. Yeah, I'm going to do it a different way. Here we go. I'm going to do it in Paint. I'm just more used to that. This is a time period in months. It's probably off the screen. You can't really see it here. Let me see if I can shrink it down. But this is the second strategy that we show folks, and it has a few variations. This is that you've heard me talk about, like program DI. This is that particular variation. As you can see here, it's the time frame is in months. Okay, so I gotta say it's the same thing. I swear, you know. So this one's up, and this is only in months. So I think this is from last year. This chart is from last year, so it's not as long as time period as the other one. The reason why I zeroed in on this particular one is because for the same reasons. And this isn't, again, directed to anybody in particular. I have conversations with lots of traders, folks that are, you know, here with Sharpe Trade and folks that aren't, and just everybody in between. So I'm just saying, this is what I've seen over like the last 10 years of showing what it is I do. Right here, everybody had all these questions about this type of strategy, right? And then right about here, the questions taper off, and right down here, nobody's asking about that strategy. Because, again, what typically happens with new traders is they don't like pain. They want to avoid pain. That doesn't work. That Dan's running a strategy, and have you seen it? It's down near 10%. Almost, you know, right almost from when I put it on and I was all excited about it, and back here, and I put it on, and now that thing's down 10%. That Dan doesn't know. So they go what? They go method hunting. They go looking for some other strategy because supposedly this doesn't work, even though it's operating the way it operates. It's operating the way it operates. Now, if I had done that, as you know, each morning we talk about this, and actually we talk about not this variation of the strategy, right? We don't talk about this variation. We talk about the one that has higher upside. So generally over, you know, the last historically, and you can't really go off historical results, but off of historical results, that thing's up somewhere near 600% or something since 2007. I mean, it's just destroying the stock market. But if you want those gains, what do we say all the time? You're going to have to suffer higher drawdown numbers, and you have to be prepared for that psychologically. So we actually show one that had a little bit deeper drawdowns, right? So it came down off the screen there, right? But what did it do? It has higher volatility, so it came right back. My point is this. Our point is this. This is just me demonstrating in real time the strategies, you know, that we have. And you can look over my shoulder and see them. Be very wary of falling into the trap of chasing the hot money. Chasing it because it's up here. Because unless you can learn to take one strategy that's operating the way it should operate, and you understand that, and you work through these time periods, you are never going to be able to enjoy these time periods. Flat out. It's never, ever going to happen. You're never going to be up 20%, 90%, 200%. You're never going to be up that much if you keep hopping strategies. And I got to tell you, that's one of the reasons why we have set up what we demonstrate to folks and what we let people see, because we don't, you know, we're doing other stuff. We're very, you know, we're just going to show 3 strategies with the Sharpe report. We're very careful with what we let people see. And the reason for that is because we understand that trap of method hunting is there, and people want to chase hot money and who's hot. And if you chase hot money, you're just going to be chasing. It's no different. Chasing hot money and somebody that's performing well is the same thing that's buying a stock, you know, just because it's up. And, you know, you're chasing a hot stock and you buy it after the, you know, 45% rally, and you bought the top. And then the thing turns over. Well, this stock sucks, so I'm going to go buy something else. This thing, man, I don't know, you know. And so you go look for the what? You go look for the next stock that's flying high and performing well, and it's just taking off like crazy. Well, I'm going to buy that one. And you buy the top again, because nothing goes up in a straight line forever. And so chasing hot money is the same thing. You know, I'm going to get into this one because, wow, look at it. It's up 10% in just that short time period. Oh, wow, this sucks. I'm going to dump out of this because it's not doing well. Do you see what we mean? If you keep doing that, you're never going to be able to enjoy these time periods because by definition, running trading processes is about grinding. However many metaphors you want to apply to that, whether it's going through an entire baseball season with every single game stepping up to the plate, or you're one of these old style gamblers with limit poker and you're going to set in for a good long stretch of a game, that's what trading is. By definition, that's what trading is. And as I was saying, that's why we're very careful about the strategies that we let one see. That beginning strategy, the second variation strategy. And you notice we've been very ginger about looking for trades because why? Because we're demonstrating with long-short trading, right? So do you sort of see the point? I hope so. I'm telling you, because and the reason again I'm saying this is because all the numbers start flying in and all the questions, not from folks that have been with us for a while, but from new folks. When we hit these numbers and then it hits 25%, then it hits 35%, then it hits 40%. And yes, this is the variation that Sharpe Trade itself runs. Ooh, then everybody's real interested, right? Just what we're saying here, don't chase us because it's hot money. Don't chase a strategy simply because that strategy's up right now and tends to be looked to be performing, and that's why you chose it. Look at its longer statistics that we always talk about. What is its performance over the last 20 years? What does its Sharpe ratio look like? That's critical. Its Sharpe ratio is critical because that tells you how much sort of volatility, if as long as the return slope is pointing north. Because Sharpe ratios have their downsides as well. But what's its Sharpe ratio look like? Because that tells you, as long as this thing has positive expectancy, and you like the performance in terms of percentages, and it's got a nice Sharpe ratio, well, then that's telling you, okay, there's not as much volatility there, because volatility is what hangs up the new trader. When we say the volatility hangs up the new trader, what do you mean by that, Dan? In other words, down and then up, right? They don't like the down. They don't like the size of the down. Let's put it that way. They don't like the size of the down moves as opposed to what they're looking to get for a reward. So that's why we tell folks, look at those Sharpe ratios, look at those drawdown numbers. Is it still performing as it still, should be performing? So for now, this is, right? But I wanted to say it now because everything we got is performing so well. I mean, Friday was incredible because I, not myself as sick as I am, although that may be why I'm sick. A family member was having surgery on Friday, so I was away Friday, right? And I was in the hospital. My God, I hate hanging out in hospitals. But anyways, I was in the hospital all day, and I could only check my phone. So I was checking my phone to check on the markets, and I was like, good grief, would you look at that thing go? Sharpe Trade itself, our total portfolio, in one day added something like, I don't know, I'm going off my memory here. I think it was like 150 basis points, 160 basis points in one day. And that's not one strategy. That's the total book. I couldn't believe it. It's like, wow. So, anyways, that's what I wanted to say for today. Okay. That has been what it's been. That's simply been our thoughts. Our positions. They have not changed since Friday or Thursday. So we're just letting them go, especially this, as we've said, we've even let ones know publicly. Why we're long the Qs, right? The actual strategy we're using. But I've even let ones know, like way back. When did I first start talking about it publicly? I mean, you guys have known about the way the whole year's gone. But I think was it back here? We said we've got that massive Q position on. So what do you do in this state? Well, you don't get bored and look for something else. You just let the process be the process. All right. So, anyways, I've preached that sermon enough. I can't believe it's up again. So isn't a pullback due? I don't know. I don't know if a pullback's due or not, or this thing is going to take off like on some historic run that 3 years from now, everybody is like, do you remember that? Man, who would have been long the Qs? Well, this is a strategy that attempts to capture those sorts of moves. So I don't know if that's going to happen or the thing's going to pull back. Nobody knows. Nobody knows the answer, so we just follow the process. And that has been our thoughts moving into the next week. And that has been what it's always been. It's simply been our thoughts, not yours, for whatever that day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.